Now, as we spoke about, commodities taking a big hit today, silver falling over 8%, as did the price of oil. So just what should investors take away from today's market action? My next guest is here to help us sort this all out. We have Dennis Hynes, Chief Market Strategist at RW Pressprich. Dennis, always a pleasure to have you with us. What do you make of the decline in commodity prices? Is this directly related to the jobless claims report that we got today?
I think the comment that Deborah made, the last one, she said at the very end, was the ECB. I believe that is the first. I believe you have a trifecta of the CME, with when it had increased its margin requirements.
For trading silver, you have to pony up more money if you want to play in the business of trading silver. All right, so more money there for margin.
But the Trichet comment, Mr. Trichet, when he said that we're pushing back the rate hike until after June, that was a serious surprise and a disappointment. That caused short covering. Why would that be?
Short covering on the dollar, right? Because a lot of people were short the dollar, long the euro. The euro goes from 148 down to 145.
That's absolutely correct, and that's the way it works. Okay, the way the currency traders work is they go after the currency with the highest interest rate. So therefore, they go to the euro because their rates are going higher, and we are not. And so when that was turned on its side, it essentially said, hey, you're wrong, this trade needs to be undone. Well, the unintended consequence of that is that when you weaken the dollar, you increase the euro and other non-dollar denominated currencies. Well, since the commodities are all priced in U.S. dollars, the foreigners can buy more of it. Okay, or in this case here, less of it, because the dollar strengthened, their currency weakened.
Right, good for Americans. If you want to buy oil, you want to buy gasoline, supposedly it just got 8% cheaper.
Bad for everyone else. Okay, and so that I believe, and so then you add that, you have the people on the CME, when it was concerned, this was way too late, if you will, when the euphoria got beyond, okay, most people's reasonableness, the CME said, okay, let's stop this because it's a bit too speculative. So all the poor little late entry investors got slammed.
Don't be late to any party, right, Dennis Hynes? All right, we're going to continue the conversation. Dennis, let's talk about another precious metal. As I noted, silver declining, what, about 6% today. What about gold? Gold prices also fell.
So silver has declined 28% from its recent high, and at the same time, gold is down during the same period from its high of last week of 1574 to when I was last looked at it, 1468 or thereabouts.
That's right, under $1,500 an ounce.
Yeah, 3.5%. Okay, not so bad. I mean, the long-term uptrend in gold is still very much intact. However, let's talk just a moment here about what inspired this. Well, we had Mr. Soros, okay? And you add to that, you know, Mr. Trichet.
Explain what happened with George Soros, because that was earlier in the week. There was a news report coming out that he had sold some of his gold holdings.
The argument was that Mr. Soros believed that the reason he purchased gold was because of deflationary concerns.
Correct.
He believes that with the profligate Fed, he's no longer worried about that, and he doesn't think inflation is going to go roaring ahead. It'll be just about right. So he said the trade wasn't really the best trade right now, so let me take some profits. What he didn't say was, in my opinion, he has every reason to reinvest when the sell-off completes itself, simply because he's an excellent trader. So what he's done, and he talks about it, watch what people do. Great investors, you forget about what they say. Well, what you do is watch what they do. For example, our policymakers talk about a strong dollar policy. Well, that's the last thing we want, is we want a weaker dollar policy because we are trying to recalibrate the world markets. We want to become an export economy. We want China to become a consumer economy. It's happening, but it wouldn't happen if we started to say that we want to weaken our dollar, because that means that all of the investors who have treasury securities will be debased themselves and depreciated. We don't want that to happen.
Well, we don't want it to happen quickly. We wouldn't mind having it happen slowly, gradually.
That's correct.
Right?
Yeah. What we want to do is we're having our cake and eat it too. We're able to borrow as much as we can, and we continue to do that as long as we say our intention is to strengthen the dollar. Well, that is not our activities or our actions would belie that. because we're doing things which do just the opposite. And of course, the principal thing we're doing is borrowing $890 million every hour. And as we just keep adding more and more, even with the Fed coming off, it's QE2, there's talk about reinvesting in other markets, which means it's essentially a sterilization. And in fact, we are still continuing this excessive feeding of money to the system.
Well, having said that, though, if you take a look at what bond traders are doing, people are scooping up treasuries faster than the Treasury can print them. Bond yields are going down. The prices are going up. People want to hold treasuries.
That's correct. And I think the fact is that Mr. Bernanke, I consider him this wonderful, astute, Great Depression, a scholar. He still, I believe, quietly, stealthily believes that deflation could be a problem. Even though Soros says otherwise, I believe he believes it. And that's the reason he just keeps saying, I'm going to print as much as I can. The PCE, this personal consumption at deflator, which is at 0.9%. He's using 2% as his level to stop things. And that's nowhere near that. So he still believes that the problem might quietly still be deflation. And
I still want to push you on gold, though, Dennis Hynes, because maybe you saw the report today about the Central Bank of Mexico adding 100 tons of gold to their reserves. They wanted to diversify a little bit away from the U.S. dollar. Do you think investors who haven't bought gold, who've seen it go to $1,500 an ounce, now pull back $1,464, do you think people should buy gold now?
Absolutely. I think that, well, wait for it to stop going down first, please. And what does that mean?
And that's what you're going to tell us, right?
Yeah, I will tell you that. Okay. I think, well, in my opinion, of course, my humble opinion, that I believe the market trades down to, can it trade to a 1375? It can trade to 1375 and still keep this incredibly wonderful uptrend intact. So what does that mean? Have the market trade, test 1400, have it then recover from that. And if you don't mind, if you can wait for 1500, give yourself a little bit of margin for error, and then get right back in again. What you're doing is buying gold. You are hedging the debasement of our currency, the dollar. And that's what this is, and that's what the world is doing. They are hedging the debasement of the U.S. currency.
What about stocks right now? We saw the sell-off in stocks. Stocks did not end at their lows of the day. Do you think that stocks are something to go long?
Again, wait for the market to. We've had, someone who you and I have talked about in the past, IBD, Investors Business Daily. They have moved to the market from an uptrend yesterday to a market now in correction. Now, they've done that. They've made 11 different switches this year. That is only indicative of the choppiness of this market. So I'm not saying that. I'm still bullish. And I think after looking at tomorrow's reports, I'm looking for a place to get back to fully invest in the stock market. So I do not believe we're in correction as of yet. I believe tomorrow, should we close the S&P below 1327 after the jobs report, close the week, if we close below that, I'm afraid we have further to go on the downside.
All right, so 1327, that's the number we got to look for on the close of the S&P futures tomorrow.
Yes.
And we've got to watch the 8:30 report, the government's job numbers.
The most important report that we have in the world.
And yet everyone always used to say that the unemployment rate is a lagging indicator.
It's not the unemployment. The unemployment rate, it may be, but it's the palpableness of the non-farm payroll. It's an absolute number. You know people who are out of work, okay? And so when you hear that there are 200,000 jobs added, that means something to you. The unemployment rate is kind of a nebulous thing. Right. Hard to get your arms around.
Well, that's why we have you, to help us get our arms around it. You got your black belt in karate to help us. I want to thank you very much. Dennis Hynes from RW Pressprich. Always a pleasure.